How does this deal align with Adnoc Logistics' long-term growth strategy? Why now?
Sure. We've been growing very, very fast. And what's critical to us is to have the avenue to continue that growth internationally. So we're an extremely successful business operating out of the UAE. We've got an enormous integrated logistics activity here, the most diversified fleet in the region. We have an international shipping presence servicing more than 100 customers over more than 50 jurisdictions internationally. But we don't have that international presence in terms of commercial desks, commercial operations, international ship management activities, crewing that we can get through the Navig8 platform. That's a really successful platform that's been built with a strong entrepreneurial spirit over the years. And we think it's a great match for our business ambitions internationally.
And just in terms of the terms of this deal, the agreement outlines an 80% acquisition for $1.04 billion, but you also have the option to buy that remaining 20% in 2027. Was there any specific reason for that staged acquisition approach? Walk me through it.
Actually, it's a commitment to buy the remaining 20% in 2027. The reason we have that approach is twofold. First of all, we're strong believers in the existing team at Navig8. They've done a great job over the years. The leadership is excellent and the people are excellent. We want to be having them strongly involved in the business during the coming 3 years, and of course that team going forward beyond that. In reality, it's quite likely that towards the end of the 3-year period, we have a discussion about continuing the joint ownership beyond that. But the nature of the deal, we wanted to be able to demonstrate a clear path to 100% ownership, and that's the reason for that commitment in 2027 to acquire the remaining 20% of the business.
Okay, so this is a commitment, not an option, and that's good to know as well. Just with regards to the impact on earnings as well, you said you expect to see around a 20% boost in earnings per share within the first year. So what specific financial synergies do you see coming from this acquisition, and how does it help you bolt on revenue growth moving forward?
Yeah, absolutely. So we'd see at least a 20% EPS accretion in the first year of ownership. There's a number of facets to the strength of the combination of the businesses. So Navig8 delivered $400 million of EBITDA in 2023. 2024, certainly the outlook is better than 2023. They have an existing fleet of 28 tankers, and they have 4 additional MR tankers coming. This year, we're seeing tanker earnings particularly strong year to date, and there's no reason to anticipate that changes dramatically for the remainder of the year. So already, simply through their vessel ownership, we see strong accretion and strong connection to our existing tankers fleet. Beyond that, they have the results from their commercial pooling operations, their integrated bunkering business, which is a strong performer internationally, their ship management service provision, their data analytics and environmental products. So we see a really strong value accretion. We see a really strong overlap in business activity. And we see a strong ability for the Navig8 platform to help us to extend our services internationally. So strong accretion through assets, but also strong accretion through services.
Obviously, quite a significant validation of the state of the industry right now as well, just given the size of this transaction. How would you characterize the operating environment right now, and would you expect tanker rates to stay intact at these levels or even improve into the future? How do you see, if you're looking into the crystal ball, how do you see the market evolving from here?
Yeah, we're really constructive on the market at the moment. So essentially what we've seen is a very slow growth in supply, at the same time as we've seen very strong growth in ton-mile demand for tankers across tanker segments. And that's continued through the beginning of this year. In part, that's driven by geopolitical situations like the crisis in the Red Sea at the moment. But mostly, it's fundamentals. It's strong demand growth for ton-mile transportation of oil and oil products. And that's matched with relatively slow growth in supply, and there's very limited slots available for building incremental tankers in the next 2 to 3 years. So that means for us, certainly during this year, but for the 2 to 3 years beyond, we're extremely constructive rates in the tanker market. It's a good time to be in the market.